Click the bell icon to get latest videos from Ekeeda.
Hello friends, today we will learn how to calculate economic order quantity with the help of one basic question. Let us read the question. From the following particulars, find out the economic order quantity. Now what is economic order quantity? See, there are two costs relating to the materials. One is ordering cost and second is carrying cost. Now what is ordering cost? Whenever we require a material, we are required to place an order to the supplier to get the required material. All expenses relating to execution of purchase order are called as cost relating to order. For example, when we are required to purchase, we try to find out the possible suppliers who can supply the best quality of the products material. So we'll require to search for suppliers. We are required to invite quotations. So there will be some expense incurred of communication, correspondence. So those all consider as what? Ordering cost. Then we'll be having continuous communication with the supplier to inspect the quality of the material to be supplied, then feedback from the other customers. All this event comes and there will be so many process where we are required to incur money and man hours to get a particular product through an order. So all those expenses are referred to as what? Ordering cost. Now logically, if there will be more number of orders in a year, there will be more ordering cost. So any manufacturer will try to reduce the number of orders. What you purchase for 3 or 4 times, you will try to buy them in 1 or 2 times so that you can have what? Lesser number of orders. Now in this case, if you do that, it results into arising of other cost called as what? Carrying cost. If you order in bulk, you need to store. If you need to store, you require storage facilities. You may require to pay godown rent. You may have insurance facilities, security facilities. So that storage cost or the expenses which you are required to incur on manpower relating to the warehousing, all those are referred as what? Carrying cost. Now ordering cost and carrying cost, they are having inverse relationship. If there will be more number of orders, lesser quantity is demanded with each order, there will be lesser carrying cost. If there will be lesser number of ordering cost, in that case bulk purchase will be made, it will in relation then increase carrying cost. So any manufacturer would like to have minimum ordering cost and minimum carrying cost. So that set off is possible where you can reduce both the cost, which is called as what? Economic order quantity. So manufacturer is required to find out what is economic order quantity for his particular business activity so that he can have minimum ordering cost and minimum carrying cost. In this question now they have given annual demand 12,000 units. That means in a year there is going to be demand for 12,000 units for production purpose. Ordering cost is given rupees 90 per order. Inventory carrying cost per annum per unit, it is given rupees 15. Now with this information we are required to calculate economic order quantity. In this question we are required to find out annual requirement, that is given in the question. Annual demand is 12,000 units. Ordering cost rupees 90 per order. Inventory carrying cost per annum per unit rupees 15. We will try to find out economic order quantity with the help of equation, that is square root of 2AO divided by C. Here A means annual requirement, O means ordering cost per order, C means carrying cost. So it will be square root of 1,44,000. So approximately it will be 380 units. This is how with formula we can calculate economic order quantity. Thanks for watching this video. Stay in tune with Ekeeda and subscribe to our channel Ekeeda. Thank you.